plunged by 9%, which is the worst daily drop that was seen since 1983 on last Friday, due to a hawkish fear as portrayed by market participants after US President Trump nominated a new Fed Chair, Kelvin, who was previously remarked that he has a preference for a tighter Fed balance sheet. And that also created a negative feedback loop into the global stock market, where the S&P 500 and the Nasdaq 100 plunged on last Friday, and it continues to extend its losses in today's Asia session, where the E-mini futures on both the S&P 500 and the Nasdaq 100 continues to extend their losses close to between negative 0.75% to negative 0.8%. The US dollar has shown some strength on last Friday, but in today's Asia session, it's attempting to actually shape a minor bearish reversal. Very good morning to all, and welcome back to today's Daily Dose of Market Insights after last Friday dramatic movement in the global market space. So before we kickstart today's gist of the Daily Insights, let's have a quick look at the disclaimer first. All right. Leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is for general information purposes and is not investment advice. Past information is not representative of future results. Right, so my apologies for a slight late start for today's daily dose due to the fact of some technical issue which I need to restart my laptop just a while ago. So this will be the disclaimer slides. All right, so as usual, before we jump straight into today's full suite of daily dose of the intraday chart, which is very important. Why? Because of last Friday dramatic movement in terms of the price action after the announcement of US President Trump Fed Chair, the new Fed Chair, which will be incoming in after April, which is Kelvin over here. So later, let me share you about what has taken shape on last Friday first. All right. So on last Friday, the most dramatic movement was in the precious metal over here. Right. So let me share the chart of the precious metal. Okay. So let me bring you the screen. All right, over here. Great. So very quickly, this is the price action of gold. All right, over here. So gold on last Friday shaped a decline of 8.8%, so 9%. So this is the kind of a worst daily decline that is being seen since 1983 over here. And the story over here is that after last Friday price action, if you were to look at the weekly time frame chart over here for gold, so this will be the weekly time frame chart. So the weekly time frame chart for gold, it actually shaped a, okay, this will be gold over here. So let me push it up. Okay, so the weekly time frame chart for gold shaped a weekly bearish shooting star candlestick. Okay, and this weekly bearish shooting star candlestick comes with a bearish divergence that is being seen on the price action of gold over here. So right now is fast approaching this 50-day moving average, which is also our key long-term pivotal support at 4,560. So what it means over here is that there is actually a big risk for gold that it may have potentially ended this very strong bullish major impulsive uptrend from September 2022 all the way up to the high of last week, which is the all-time high on Thursday before the collapse take shapes on Friday, which is the all-time high, which is around 5,600. All right. So given this situation over here at this point in time, there is actually an increasing risk that due to the dramatic movement of last Friday sell-off, that could potentially indicate that if this 5,560 long-term pivotal support doesn't hold, potentially we may start to see a risk of a multi-month corrective movement on gold XAU/USD due to this very sharp rampant move up that was being preceded in the last 3 months, and that a negative feedback loop that has cascaded on last Friday have this kind of elevator down effect on gold price. And the reason over here is that we got to be a bit mindful is that due to this rampant push up, there's a lot of leverage play that is being taken by speculators, both on the option market especially, and that could also potentially lead to a disruptive of unwinding, what do you call it, disruptive unwinding of such a speculative leverage position, which could also have this kind of negative cascading impact as well on the gold price XAU/USD. So the story over here is that I do understand that if you look at the media report, they actually put the blame on this new, we call it Fed chair pick by Trump, which is Kelvin Walsh over here. So Kelvin Walsh previously, he was actually not a really ultra hawkish guy. All right. So yes, indeed, in the past, about 4 to 5 years back, he also did mention that he actually has a preference of a tighter Fed balance sheet, because we know that in the last 10 years or so, or the last 5 to 10 years, there was actually a preference in the leadership of the Fed at that point in time. At that point in time, Kevin Walsh was only a governor over here in Fed. So during his public speeches at that point in time, while the Fed is undergoing this kind of QE1, QE2, QE3, he actually voiced kind of a displeasure about this quantitative effect of the Fed expanding their balance sheet. So he has a preference of a tighter balance sheet. But if you look into place that Trump himself, he and his administration always push up for a lower interest rate environment. So in order for Trump to pick Kevin Walsh as a up and coming new Fed chair, he must have started some kind of conversation with US President Trump that he's much more in line with the current administration point of view, which is a choice of a lower interest rate. So it's a bit absurd to actually point to the blame of the picking of Kelvin Walsh that created this tremendous negative feedback loop in gold price, and as well as a negative feedback loop in global stock indices as we are speaking right now. So if you look at the US Treasury market, that is much more sensitive to upcoming monetary policy, US monetary policy, we call it upcoming US monetary policy stances. Now, in line that we have a new upcoming Fed chair pending confirmation from the US Congress, which is Kelvin Walsh, it doesn't actually reflect a new hawkish stance by the Fed that could be led by this upcoming Fed chair, Kelvin Walsh. So if you look at the US Treasury 2-year, right? So this is the one of the most sensitive to US Federal Reserve monetary policy stances, which is the 2-year Treasury yield. So in fact, the 2-year Treasury yield declined on last Friday, right, upon the news confirmation that Kelvin Walsh will be the new upcoming Fed chair. It actually declined by 4 basis points to trade lower at 3.52% and threatening to break below the 50-day moving average. So that movement of the 2-year Treasury yield, which is considered as a close proxy of future US monetary policy, doesn't really indicate that we may start to see a brand new US Federal Reserve that is planning to start hiking interest rate as soon as 2026 this year. And if you look at the 10-year Treasury yield, all right, over here, let me put it up again. Okay, where was it? Okay, put up the 10-year Treasury yield. Okay, so the 10-year Treasury yield was unchanged on Friday. All right, so this is the 10-year Treasury yield, a daily chart. All right, so it was almost unchanged on last Friday, trading at 4.24%. All right, and also didn't break above the last month high of 4.31% over here. So that also implied that longer term interest rate in US is kind of being contained right now as being depicted by the US 10-year Treasury real yield. Then let's take a look at what is the US, we call it Fed Funds Futures traders implying by looking at the CME Fed Watch 2. So if you look at the CME Fed Watch 2 over here, we know that before the appointment or the official announcement of that new Fed chair nominee, Kelvin, the market is looking at a high chance that the Fed will not change based on the current Fed chair press conference last week, penciling in 87% chance that the Fed will maintain a stampede to keep interest rate on hold again at 3.5% to 3.75% over here, but continues to maintain a interest rate cut cycle heading into 2026 in the summer months. So there's still high chance of 84% chance that the market participants is as in the Fed funds futures market is expecting the Fed to continue its interest rate cut cycle by extending its potential fourth cut to either come in the 17th of June meeting or the 29th of July meeting this year, which has a high chance, both has a high chance of 84% and 80% to bring it down by another 25 basis points to 3.25% to 3.5%. And the market is also looking at a chance of 63% for the potential fifth cut to come in on the 16th of September meeting, and a higher chance at 87.5% to come in on the 28th of October meeting, FOMC meeting, bringing it down to 3% to 3.25%. And by the time 2026 end, which is the last day of the date of the FOMC meeting for this year, will be on the 9th of December 2026. Market participants expecting a chance of 92% for the Fed funds rate to be at 3% to 3.25%. Okay, away from the current rate of 3.5% to 3.75. So market is still looking for at least 2 interest rate cut by the Fed, as being kind of implied by the CME, by the Fed funds futures traders, we call it behavior, the latest behavior, as implied or as calculated by the CME Fed Watch 2. So if you look at the fixed income market in the US Treasury, both on the medium term to the long term and the shorter term one, which is the Fed funds futures market, they are not implying a hawkish Fed at this juncture. So whatever reason that causes gold price and silver price to tumble, silver price tumbled much more than gold, which is about 26% at one juncture. It tumbled as low as negative 30% 35 or 36%. So that's the worst fall in history for silver. That is more likely linked to over leverage build up position prior to last Friday sell-off that potentially triggered a rampant of what I call a stop loss order that is being triggered, and there was a rush for exit rather than a what I call it a change in the monetary policy stances that may be undertaken by the Fed, because the US Treasury market as well as the Fed funds futures market doesn't indicate that the US Fed is about to embark into a hawkish monetary policy under the potential new leadership of this new Fed chair, Kelvin over here. All right, so that's the key takeaway that I want to share you guys in terms of the macro narrative that has taken shape on last Friday and we are seeing right now. But however, if price action continues to play out to be negative, we got to respect the movement, especially on some asset classes, and take things one step at a time as this negativity or feedback loop situation continues to extend. All right, in the very short term basis. All right, so let's look at the FX market first. All right, so the FX market, we see a series of price a jump in the dollar itself over here. So the dollar jumped on last Friday, but in today's Asia session, what we could see is that if you look at this is a 5-day rolling performance based on what we are speaking right now. If you look at the 1-day rolling performance, we see the dollar starts to subside a bit over here. All right, so the dollar now is the weakest against the euro and weakest against the kiwi. Both the dollar is down against the euro by negative 0.18% and down against the kiwi also at the same magnitude of negative 0.18%. And what's interesting over here is that if you were to look at the US dollar index over here, so the US dollar index, previously there's this line here, this particular turquoise green line. All right, So this turquoise green line, if you go to the weekly time frame chart over here, is in fact the long-term circular ascending channel support drawn from the low of May 2011 low, and it has a weekly close below it. All right, a weekly close below it, and right now there is a price action. Sorry, give me a bearish price reaction of this level, which is at 96.2 over here. All right. So there was this rebound that is being seen on last we call it Friday, a very strong bounce. Right now we start to see a negative price action coming into it. So in order for the bears to come back into play again, I think we got to see a pushback down. I would say that a higher probability chance for the bears to come into play again on the US dollar index. That means a higher chance that that rebound that we've seen on the last we call it two session over here, or the last three sessions from Wednesday, Thursday, and especially on Friday. This is a minor corrective dead cat bounce, and in order to say that this three candlestick here from last Wednesday, Thursday, and Friday is a dead cat bounce, price action got to close back down below 96.4. So 96.4 is in fact the former 1st of July 2025 minor swing low, a major swing low that was previously taken out on Tuesday, but did a whipsaw back up again on the subsequent Wednesday, Thursday, and last Friday session. And last Friday push up was due to that rampant sell off in precious metal that has a indirect correlation with the US dollar that triggered a push up on the intraday basis on the US dollar index. Right. And if you look at today's Asia session, which opened, that definitely has a negative feedback loop into Asia Pacific stock indices over here. So we see across the board negative position, with the fact that only the Nikkei 225 managed to close slightly in the green right now as we're speaking, up 0.2% due to this upcoming snap election that is being caught by the current PM to be held on this Sunday, 8th of February. All right, so market participants is looking for the current coalition party, which is him by LDP and his new one of the new coalition member, to actually extend its slim majority sitting in the lower house, which eventually will potentially allow the current PM to push out for a much more expansionary fiscal policy. So that created a bit of support on the Nikkei 225 as we are speaking right now, which is up slightly 0.19%. But we start to see across the board rate for the other major stock indices in Asia over here. So if you look at the Hong Kong 33, is actually, or the Hang Seng Index as represented by the cash market, is trading near the session low over here, which is down by negative 2%. And if you look at the Hang Seng Tech Index, which comprises the China big cap technology stocks, down by a higher level, which is them being a higher beta index, negative 3.2%. And if you look at the CSI 300, it's also down by negative 0.7%, which is the benchmark of the China big cap stocks, both listed in the Shanghai and Shenzhen exchange, and the much narrower China A50 almost unchanged, down negative 0.9%. And if you look at across the other Asia Pacific stock indices, the ASX 200 is down by negative 115%. The Kospi was also down by negative 4.6%, given that it's one of the worst hit right now because of also its rampant move up since the start of this year, where the Kospi 200 index recorded close to about what, 20% at the first month of January over here. So then in our STI, Singapore Straits Times Index also down negative 0.33%. So what I could see over here is there is still lingering fears on the global stock indices that still has this negative feedback look at play. And even though we know that the US Treasury market and the US Fed Funds futures is not pricing a hawkish Fed at this juncture, but the global stock indices seems to be moving on its own right now, having this negative feedback loop that is being impacted since last Friday. And even if you look at the E-mini futures right now, which is the S&P E-mini futures that is trading in today's Asia session at 11:31 a.m. Singapore time, both of them are down by negative 0.9% for the S&P E-mini futures, and in fact, the Nasdaq 100 E-mini futures is down by negative 1.27%. So the movement of the Nasdaq 100 CFD index and the cash market index on last Friday has invoked a minor failure bullish range breakout. So that could be one of the reasons that created this ongoing negative feedback loop in the US stock market due to shorter term traders embarking on what I call negative bearish position, and for those traders who earlier has a bullish position based on this bullish breakout, now rushing for the exit to actually clear their position, or potentially their tighter stop loss level that has been taken out, and that creating a negative cascading impact on the overall sentiment in the US stock market, which is currently negative at this point in time, right? That is spreading to the rest of the other global stock indices as well. Right. So one particular more news flow before I cover is due to this ongoing very fluid situation in the Middle East. So oil prices, as we are speaking right now, they fall as low as 3% at the start of today's Asia session, because over the weekend over here, which is on Sunday, US President Trump mentioned that Iran was seriously talking with Washington, signaling a kind of de-escalation with Iran after risk of a military strike drove prices to multi-month high last week. But overall, despite this 3% fall in we call it oil price, it's still holding above the key 200-day moving average. So this could be just a minor we call it a retracement before oil prices starts to get firmer again. And we know that the situation in this Middle East situation is very fluid, and it all dependent on US President Trump, how he decided how he dictate the current narrative right now. As in the last week, he ordered more US warships into the Persian Gulf, and that actually created a fear of escalation risk between Iran and US. So later I'll share with you the chart of the West Texas crude oil, which has rallied on last Thursday and Friday as intended and hit our short-term intermediate resistance level. Okay, so with that, that sum up the first segment of the daily dose. So let me now touch on the second segment, which is the intraday technical outlook segment over here. All right, so let us expand my screen, right, so that you guys have a better view of the charts. Okay, so let us start with the FX market first. All right, expand the screen. Okay, so let us start with the euro dollar over here. Okay, euro dollar. Okay, so the euro dollar, previously we have a very short tight pivotal support at around this 119.07, 119.10 level. So price action broke down below that pivotal support and hit the next alternative support level, which is the alternative bias, which is a extension of this minor corrective pullback, heading towards 118.33 and coming to this 118 figure, 117.90 level, which is the this former minor range high of 16th of December and 24th of December now turns into a pullback support. And if you do the Fibo retracement of the previous up move from the low of 19th of Jan all the way up to the 28th of January, that comes close to the 50% Fibo retracement. So with that, I'll be on the lookout for a potential minor bounce that could take shape today, given the fact that it comes close to certain what you call it, key potential inflection level, which is 118.33. Then I will have a 118 figure, 117.90, which is previously a critical former minor swing high of 24th of December and 17th of December now turns into a pullback support at 118 figure, 117.90. So upside trigger level will be 119.07. A breakout above 119.07 potentially will see the next intermediate resistance coming in at 119.93 in first step. Only a bearish breakdown and hourly close below 117.90 will invalidate today's intraday bullish recovery scenario, at least a minor one, to open up scope for a further extension of this ongoing weakness to expose the next near-term support level at 117.44 and 116.70 next, which is the area between the 20-day and the 50-day moving average. So that's for the euro dollar. Next will be the sterling dollar. So the sterling dollar managed to help above our pivotal support level at 116.80. So and the intraday low that is being seen in today's Asia session at 136.60 level. All right. So with that, I will still maintain a, since that it's managed to actually hold at this pivotal support level that we have on last Thursday. We will still maintain that mild bullish bias for at least intraday recovery for today after last Friday's sell-off on the sterling dollar, with the upside trigger level will be at 137.50. A breakout above 137.50 will see a retest of last week high at 138.48. Only a bearish breakdown and an hourly close below 136.60, which is this level here, will invalidate today's intraday bullish recovery scenario to open up scope for further weakness towards the next intermediate support level at 135.88, 135.68. A breakdown below it seeks out 135 figure next. So that will be the sterling dollar. Onward next will be the Asia Pacific currency, starting with the Aussie dollar. First over here. So the Aussie dollar managed to hold at this, previously we have this very tight pivotal support at this, what, around this 69, 80, 69, 69, 69, 80, 69, 90 level, very close to the 70 figure level as my very tight short-term pivotal support. Price action rallied on Thursday, but after that it can't maintain the momentum and starts to trade sideways before selling off on Friday due to that so-called fear of this incoming new Fed chair, Kelvin, that he may undertake a kind of a hawkish stance. But what was interesting over here, the price action managed to help above our next support level at 69.40 and holding above 69.07, 68.90 level over here, which is this dotted gray line here, which is the former expanding wedge range resistance, now turns into a pullback support level. So with that, I will still have this mild bullish bias today, given that it managed to help above this bunch of interesting support level. So I'll be using 69.07/68.90 as my short-term pivotal support level to maintain a potential intraday bullish recovery on this Aussie dollar. Two resistance level to watch for this intraday recovery will be 69.77. Let me put it in writing. 0.6977. Followed by 0.7024. All right, which is last Friday US session high. However, a price break below 68.90 and hourly close below it will invalidate today's intraday bullish, mild bullish recovery scenario to see further weakness extending potentially towards the next intermediate resistance level at 68.35, followed by the next support 68.35/68 figure level. Okay, let me put it in writing. 68 figure level. Which correspond to the rising 20-day moving average. All right, so that's for the Aussie dollar. Okay, next up will be the dollar yen over here. So the dollar yen, if you still recall that on last Wednesday and Thursday, we are looking for the extension of this minor corrective rebound. So the minor corrective rebound managed to hit our resistance level. Both of them, one will be at the 154.75, then followed by 155.35/60 over here. So given that if we do the Fibo retracement of that previous sell-off from 23rd of Jan all the way down to the low of 28th of 23rd of Jan all the way down to the low of 28th of Jan due to intervention fears that coincide with the 50% Fibo retracement. and the 61.8% golden ratio FIBO retracement that confluence with the 50-day and the 28-day moving average acting as a very close resistance area, which is at 15650. So that will be my short-term pivotal resistance level for today. So this could be an inflection zone 15560 slash 15650. So the upper limit of the inflection zone 15650. So I will now flip to a intraday bearish bias for the dollar yen for a bearish reaction, given that it may have already fulfilled this minor corrective rebound wave for a potential target at 155.35, 155.60. So first intraday support level to watch will be 153.85, which was last Friday US session low. A breakdown below 153.85 potentially expose us to the minor swing low of last Thursday at 15277 in the first step. All right, so these are the two key intraday support level to watch: 153.85, 15277. However, a bullish push up and a break above 15650 that would invalidate today's intraday bearish reaction view to see a squeeze up to test the medium-term pivotal resistance level at 15750. All right, so that's for the dollar yen, and also sum up all the intraday technical outlook on the four major FX pair. So now let us now visit the major stock indices. All right, starting with the Hong Kong 33. Okay, so before I touch on the Hong Kong 33, there's this major resistance level at 27,500. So why is 27,500 very important? If you look at the weekly time frame, I've been mentioning that it need to have a weekly close above it in order to reinforce our view or increase the probability that the Hong Kong 33 representing the Hang Seng Index is on its en route to transit into a multi-month bullish uptrend phase, which this 27,500 is coinciding with this longer-term circular descending trend line since 2018. All right, so that's an 8-year of what I call it long-term resistance. So on a daily basis, it managed to clear above it on a daily chart, but on a weekly basis and on a monthly basis, it has a monthly close and a weekly close back below 27,500. So going forward, at least on a very short-term basis, it may start to see another round of choppy price action movement coming into the Hong Kong 33 index, which is the representation of the Hang Seng Index, due to its failure. Due to its failure to have a daily close and a weekly close above 27,500. All right. So with that, and it tumbled all right over here and broke below 27,500. So on Thursday, we used 27,500 as our Titan short-term pivotal resistance level, looking for it to bounce above 28,000, bounce towards 28,177. It didn't hit that level, so only on Thursday during the US session, it only printed a high of 28,065 before that, what you call it, intraday sell-off take shape on last Friday. And in today's Asia session, it continues to show a weakness as well. So with that, we will switch to a neutrality stance for today between 27,175 and 26,637. So only a bearish breakdown and hourly close below 26,637 may expose further intraday weakness on the Hong Kong 33 to seek out the next intermediate support level at 26,285, followed by 25,970, which is the swing low of 8th of Jan, and also very close to this all-important former, we call it minor double bottom neckline resistance that was taken out on 2nd of Jan, now turns into a pullback support level at around 25,970. So switching to a neutrality stance for now, between 27,175 and 26,637. Only a bullish breakout and hourly close above the upper neutrality zone of 27,175, which is today's last Friday US session bearish breakdown, would negate the intraday bearish pressure on the Hong Kong 33. All right. Next up will be the Japan 225. Yes, Japan 225 managed to bounce in today's Asia session, but it can't break above our resistance level, which is at 54,155. So this seems to be a rangy scenario that the Japan 225 has started to evolve in since the low of 21st of January. So horizontal resistance at 51,155, but we have a minor ascending trend line that managed to support a previous higher low that was printed on 26th of Jan and another higher low on 29th of Jan. So right now, given this situation over here, there could be a retest of this resistance range support area over here. So I will use a short-term pivotal resistance level for sure will be this morning Asia session bearish reaction of its minor range resistance, which is at 54,115. So using 54,115 as my short-term pivotal resistance level, first support level to watch will be this 52,670/52,425, which is the current minor ascending trend line drawn from the low of 21st of Jan. A breakdown below 52,425 may expose further weakness towards the minor swing low area of 20th of Jan and 21st of Jan at 52,060, 51,837. Only a bullish breakout above 51,155 will indicate a potential minor bullish range breakout scenario. In first step, to retest the current all-time high area at 54,565, followed by the next resistance level in the short-term basis at 54,910, 55,050, which is a Fibo extension cluster level. So that's for the Japan 225. Next up will be the Germany 30. So the Germany 30 can't break above our upside trigger level on last Friday and Thursday, which is at 25,081, and broke below our pivotal support right now as we are speaking. So overall, what we could see right now is that this price movement on the Germany 30 on last Friday seems to us that this Germany 30 now is on the midst of continuation its corrective decline phase that is still evolving since the current all-time high that was printed on 13th of January 2026 over here. So with that, I will actually respect the current price action, which is much more bearish right now. And I will use this level here, which is very close to today's Asia Friday US session high. Okay, so this will be my pivotal resistance level, 24,645. Okay, 24,645 ST pivot, but this will be a resistance level. Let me put it in writing. Okay, 24,645 over here. So 24,645 short-term pivotal resistance level, flip to a intraday bearish bias. A breakdown below 24,250 may expose further weakness towards the 200-day key moving average. Which is at the psychological level of 24. Okay, let me round it down, 24,000. Slash 23,885, which is the swing low of 18th of December. Only a bullish breakout and an hourly close above 24,645 that would invalidate today's bearish bias view on the Germany 30 to see a slight recovery back again to retest the area of the 20-day moving average in the first step, with the first resistance coming in at this intraday congestion area of last Thursday, the European session at 24,890. Okay, followed by the all-important stubborn resistance at 25,081 over here. All right, so that's for the Germany 30, flipping to a bearish bias. All right, due to its failure to break above 25,085 and the negative price action thereafter. Next will be the major US stock indices, starting with the US Wall Street 30. So the US Wall Street 30, we start to see also very weak. It can't actually break above the 20-day moving average, which is our upside trigger on last Friday, 49,263, but still managed to hold above this 50-day moving average at 48,480/48,340. And now the hourly RSI starts to see a series of higher low over here. But given this ongoing lackluster movement in other of the major US stock indices, which I will share with you in a couple of minutes from now, which is the S&P and the Nasdaq 100, I'll be not so convinced of a recovery scenario in the US Wall Street 30 for today on the intraday basis. So with that, mixed element that we are seeing right now, it could be sandwiching between the neutrality zone that we have for today at 49,030, followed by 48,480, 48,340. Unless we see a breakdown below 48,340 over here, then potentially it may open up scope for more intraday weakness on the US Wall Street 30, which is the Dow Jones Industrial Average, to seek out a retest on the key medium-term pivotal support level at 47,870, which is the minus, which confluence with the minus swing low area of 18th of December to 2nd of January. All right, so that's for the US Wall Street 30. Next will be the S&P 500. So the S&P 500, the hourly RSI has staged a bearish breakdown. And right now, during the Asia session, as we are speaking now, is attempting to break below the 50-day moving average, which is the confluence with this intermediate support zone of 6,877, 6,870. So I'll be using last Friday bearish reaction swing high area over here, 6,955 over here, 6,955 short-term pivotal resistance level, flip to a intraday bearish bias on the S&P 500, a breakdown below 6,860, potentially expose further weakness to retest the minus swing low area of 21st of Jan at 6,796. Failure to hold at 6,797, pardon me, 6,797 will seek out a retest or further corrective decline sequence, unfolding to retest the medium-term pivotal support zone at 6,733, 6,720, which is the important swing low of 18th of December. Only a bullish breakout above 6,955 and the hourly close above it will negate or invalidate today's bearish bias view to retest the current all-time high area at 7,005, 7,014. Right, so that's for the SPX 500. Lastly will be the Nasdaq 100, which appears to be the worst hit, given that it's very clearly breaking down below the 50-day moving average and the 20-day moving average as we are speaking at right now. So previously, this was the bullish breakout over here. So this bullish breakout above this former stable range resistance, it ignite a minor bull run to actually seek out to a retest very closely the 26,290 all-time high that was printed in October. So it only has an intraday high of 26,246, about there. Then thereafter, it can't maintain that momentum breakdown below this former range resistance, indicating that previously this is a bullish, failure bullish breakout, bearish reaction of it on last Friday by shipping a series of lower high, and in today's Asia session, a negative follow through by breaking below the 50-day moving average, so indicating a slew of negative sentiment that is still playing out on the Nasdaq 100. So given that the hourly RSI is now coming very close to the oversold level again, so there could be some form of a minor bounce as we head into the opening session of the US session over here. So minor bounce, resistance zone to watch out for 25,435, 25,550. So using the former failure bullish breakout range level at 25,760, 25,830. So that will be my short-term pivotal resistance zone for today as we flip to a intraday bearish bias due to this ongoing negative feedback loop that is playing out on the Nasdaq 100. Two intraday support level to watch: 25,090, 24,924. Let me put it in writing over here. 25,092, 25,924, 24,924. Okay, 25,092, 24,924, breakdown below 24,924 exposes the medium-term pivotal support area at 24,700, 24,580, which is the 18th of December 2025 key swing low. Only a bullish breakout and an hourly close back above 25,830 that would invalidate the bearish buyer's view for today on the Nasdaq 100 to see a squeeze up in first step towards 26,016, 016, followed by the current all-time high, the all-time high area of all-time high level of 26,290. All right, so let me put it in writing. Okay, so flipping to a bearish bias in any cases of any bounces. So as long as these bounces didn't surpass above 25,760 / 25,830 short-term pivotal resistance level, there could be a risk of further weakness on the Nasdaq 100 for these three support level to keep a close eyes watch on today: 25,092, 24,924, followed by 24,700, 24,580. All right, so that's the Nasdaq 100 and sum up all the intraday technical outlook on this ongoing negative feedback loop on the intraday basis that is still playing out on these major stock indices. Now, let us start to the switch to the highly volatile precious metal market, which is gold XAU / USD. So what I could see over here is that previously in this morning, we have a short-term pivotal support which I highlighted before the start of my daily. Those now is actually breaking down over here. So with this breaking down of this level, it seems to us that there is still no signs of a minor corrective bounce that may be taking shape on gold XAU / USD at this juncture as we are speaking. So this push down here seems to be now transversing into a minor impulsive movement, which is an impulsive wave 3 over here. So if you do the Fibo extension from the all-time high of 5,600 all the way down. Okay, so this is 1.618. All right, then we have further down will be 2 times over here. All right, so it could only may find a bit of we call it consolidation once it hit this 4,550, 4,500, maximum 4,405 level. So with that, bearing in mind that this level here, 4,505, graphically also coincide with this medium-term ascending channel support drawn from the low of 28th of October 2025. All right. So given the fact that there is no signs of a rebound that is taking shape right now with the break of this level here, which is the low that was being seen on last Friday. Okay, last Friday, US session low over here. Okay, so with that, I will be using this level here. Okay, this Asia session gap down as my pivotal resistance level. $4,833. Okay, 4,833 for a continuation of this potential minor impulsive downward sequence to unfold. For the next intermediate support zone to watch, 4,550 / 500 before the all-important 4,505, which confluence with the 2 times Fibo extension on this on the downside. All right. So once price action come very close to the 4,405 level, I'll be on the lookout for any signs of a bullish reversal price action condition. In order to see a chance of a potential snapback rally, given this very steep impulsive down move sequence that we are unfolding. So we know that price action on financial traded instrument, especially those liquid instruments, they don't go vertical up and vertical down. There once it hits certain inflection level, there could be some signs of a consolidation or the we call it an erratic opposite movement that may take shape. All right. So if price action don't goes down as intended towards 4,550, 4,500, and 4,405 and start to rebound from here and stage a bullish break and an hourly close above 4,833, then potentially today's view will start to transform into a minor corrective rebound sequence for the next intermediate resistance to be exposed at 4,942, 5,145, followed by 5,240. So if you do the Fibo retracement of this ongoing minor impulsive downward sequence, that also coincides with the 38.2% Fibo retracement, 50% Fibo retracement, and the golden ratio of 61.8. Right, so that's for Gold XAU/USD. Still showing no signs of a minor bullish reversal at this juncture as we are speaking, with key short-term pivotal resistance at 4,833. Lastly will be the West Texas crude oil over here. So the West Texas crude oil hit our resistance level at 66.50, 66.85 on last Thursday, before tumbling down in today's Asia session about that encouraging remark from US President Trump. So now what we could see, it could be a mean reversion decline to retest the 20-day moving average again over here, which is so the lower limit of this ongoing minor ascending channel drawn from the low of 8th of Jan. So using today's Asia session gap down 64.12, 64.50, we do have a mild bearish bias for today in order for this minor mean reversion decline to play out further. A breakdown below 62.12 exposes 61.12/60.64. If this level couldn't hold, you may see further weakness towards 59 figure level, which is our medium-term pivotal support, and the rising to 50-day moving average. So once price action comes very close to 60.44 and even slightly below around this 59 level, slightly above 59.80, slightly above 59 medium-term pivotal support, I'll be on the lookout for any signs of a bullish reversal condition to flip my bias back to the bulls again. However, if price action don't drop as intended and starts to reverse up from here, going above 64.50, then the minor corrective decline sequence or the minor mean reversion decline sequence will be invalidated, and see the continuation of the boost for West Texas oil to retest 65.30, followed by 66.50/85 in the first step on the intraday basis. All right, so that sum up today's daily dose of market insights. So before we go, let's have a quick look at the economic calendar. What are the key economic data to look out for today over here? So going to the calendar over here. So today over here, Monday 20. Come on, it should be next week. I don't know why it's showing the previous week. Give me a minute. Sorry about that. Let me push back to this week. So come on. This week. Yeah, I'm not sure why it's showing last week. All right. So give me a couple of seconds to get it refreshed again. Okay, seems to be hanging right now. Come on. All right. It's still not showing this week. Okay, good. So on the European session over here, the key data to take a look at will be Germany retail sales for the month of December. That will be at 3 p.m. Singapore time. That could potentially influence the euro dollar, the euro crosses, all right, and in some form the Germany 30 CFD index. Then we have 7:45 p.m. We have Bank of England, one of the officials speaking, Brendan, will be that could influence the sterling dollar and the sterling crosses. Then in the US session, we have an important tier 1 data, which is the ISM manufacturing PMI data. That will be at 11 p.m. Singapore time. So that could influence the movement of the major US stock indices, and in some form the major US dollar pair as well. So that sum up the key economic data to look out for today. And also we are now still in the midst of the US earnings session over here. So on Monday, we have one particular interesting US technology stock, Palantir Technology. So Palantir will report its Q4 earnings after the close of today's US session. So early morning Singapore time after 5 a.m. So that could influence the Nasdaq 100 E-mini futures and the S&P 500 E-mini futures, given that Palantir Technology tends to kind of trigger a significant intraday feedback loop back into this tech-centric heavy Nasdaq 100, and also in some form the S&P 500. All right, so that's something to look out for today in terms of the earnings reporting from the US stock market. So with that, sum up today's daily dose of market insight, a slightly longer one due to the situation that is taking place on the global markets right now. Have a great day ahead, and we shall speak again tomorrow. And this is Kelvin here, signing off. Thank you.